This is the Asia Trade. I'm Shery in Tokyo.
I'm Haidi, Stroud-Watts in Sydney. The top stories this hour. Asian stocks are set for losses after Wall Street's worst day since the August meltdown. Worries about US and Chinese growth fueling a flight from risk, with Treasury yields tumbling and the yen stronger. Tech was the hardest hit in New York, with Nvidia suffering a record rout even before Bloomberg broke the news of a widening antitrust investigation.
And those Nvidia moves will be front and centre as one of Asia's biggest chip conferences gets into another day. We're here live in Taipei for Semicon Taiwan. I'm Annabelle Drawlers, speaking with the Semi president later this hour.
Before that, we do have some data crossing the Bloomberg when it comes to Australian manufacturing activity. The PMI for August, this is the final reading from Judo Bank. The composite number actually ticking up a little bit to 51.7 from 51.4. We're also seeing that services component also seeing a little bit of strengthening to 52.5 from 52.2. So still pretty comfortably in that expansionary territory. We have seen that lift off when it comes to the Aussie dollar, particularly trading against the Kiwi, given the relative hawkishness that we continue to see from the RBA. Of course, so much depends on what we get from the Fed, and that payrolls number will be front and centre for the rest of this week. But, Shery, we have been seeing some of that more supportive data, I guess, just adding to that stance from the RBA that they're either behind the cycle or not in any rush to join the easing cycle.
Yeah, it's all about eco data these days, right? Where will central banks around the world will go from here? And U.S. traders had to come back from Labor Day holidays to weak manufacturing numbers, contraction for a fifth consecutive month. That didn't help. That added to a wall of worries, right? We're talking about eco data being weaker than expected, at least in the U.S., also in China. Then you have, of course, September already being a pretty volatile month. And then you have the exuberance over AI also dying down. Then you have the likes of Nvidia losing more than 9% in a single session, and you're talking about a wipeout of about $280 billion from that stock. And then you have the Philadelphia Semiconductor Index seeing its worst day since the start of the pandemic. This is how U.S. futures are coming online, and we continue to see downside. That's why we already had Treasury yields really plunging. Also, on the overnight session, we had more expectations that the Fed will have to perhaps carry out that outsized rate cut of about 50 basis points. The two-year yield below 390. Remember, we started at around 5% around April. We were watching oil prices as well. We had commodities taking a plunge as well. I mentioned concerns about China's slowing economy. Well, take a look at how Asian futures are coming online as well, because we've been following all of the eco data here on this side of the world as well. But given the rise in the dollar, we're also seeing the other side of that trade also being hit, at least now for the Japanese yen, though, because we continue to see that pressure upwards, especially with Governor Kazuo Ueda really reiterating his stance that he's committed to tightening, at least here in Japan. You have Nikkei futures unchanged at the moment, but we'll be following those semiconductor names, of course. Sydney futures also pointing to the downside of more than 1%, and the Japanese yen at that 145 level, Heidi.
Yes, and we continue to kind of watch the volatility play out in these markets. Let's bring in Hebe Chen, a market analyst at IG, who isn't entirely surprised. And we know that September tends to be quite problematic for risk assets. But has this sort of resurgence, or I guess the recurrence of the AI headache surprised you at all? Do you look at Nvidia now and realise that the previous sell-off on the back of the guidance disappointment was perhaps not a blip?
Well, I will say that in terms of the sizable, that such a big company that dropping in such a significant pace is surprising, but probably not surprising if you look at how much the Nvidia share price has moving up this year, and it has recovered about 20% in August, which has demonstrated how volatile these stocks and also this sector is. Well, I was saying that the market is taking a quite high expectation for Nvidia for AI, and that's why the reason that pushing up the price so significantly. But high expectation, which also meaning that when the market taking a downturn, there will be higher level of a disappointment. I think I mentioned last time that I think that it's a bit overdone there. But given that what sort of outlook, as you mentioned about the September we have so much uncertainty to unlock, and the market is taking a quite extra cautious and pointing or focusing on these such volatile stocks. I think that's a point that probably not surprising me, but moving forward for the rest of September, how far that the Nvidia's or the AI stock could potentially taking a step backward, I think that will be something that I'm also quite keep my eye on.
How are you positioning then in terms of a lot of risk going into, really perhaps until the end of the year?
Well, I think, yes, as you mentioned, September traditionally is not a good month. And what we're talking about previously is about the seasonal pattern. But I think this September is particularly challenging because we're likely to see a lot of risks that unsettle. We're having the political noise coming back from July. We'll have the rate cut potentially will disappoint because the market is now pricing 100% basis point. And also have a lot of things that potentially Bank of Japan will sense more hawkish at the end of this month. I think September is particularly challenging. But if you're looking for back into the historical data, that potentially before the election time, September to the November is often the time the market taking a bit cautious. Psychologically, or a lot of reasons been driving that. But often after the election, market will often taking a bit of the relief rally as that what they usually do. And then especially this year, we potentially have another rate cut in November or December. I think that's probably a time the market can take it to relax. But before that happens, I would say that for the next 4 to 6 weeks is the time that we're particularly challenging. And it's a particular time that the investor trader have to be cautious about.
Does that narrative of a potential rebound after elections also apply to China? Because they seem to be having their own narrative of a slowing economy this week, manufacturing PMI still in contraction, the residential slump not going away.
Yes, exactly. We have every month we're having 2 sets of PMI, and this month we do seeing quite a disappointing coming from the manufacturing sectors. And that worries the market particularly because we now everyone's a growing sense in the market that we know the culprit of China, a slowing economy in China, is sitting on its property sector, sitting on its manufacturing, which potentially getting worse because the more tariff coming from the other countries on its EV, which is now positioning as an engine for the Chinese economy. So all this putting together is that big pack of worry for Chinese economy. But on the other hand, we also have to be aware that given the market response back into August and especially last Friday, the expectation for the stimulus coming from Chinese economy policymakers is coming to a very low level. So the market is now expecting a game-changing policy support, but they would rather just seeing a top policymaker to showing their effort, showing the commitment to support the economy. So I think that's a bit of a mix and negotiation in between what can really expected and what the actual data is. The expectation is low, and I trust that there's more things potentially all coming to at least support the sentiment in the market to expect to still carry the hope towards the end of the year.
We've been watching very carefully a potential unwind of the renminbi carry trade, given what we saw with the yen. What's happening in these two currencies?
Well, yes, I think that's based on what the PBOC that has say in the past months. They're saying that we're trying to avoid a quite dramatic easing. But I think that the expectation is that there's quite a lot of easing or quite a lot of the easy money that could be expected given what has happened in the economy. So I think that we're potentially giving a bit of pressure for the Chinese yuan, and plus that we have seen the USD, the Fed will cut the rates for the upcoming 3 months. So I think a downtrend for the Chinese yuan is quite likely on the table. That's my view. But on the other hand, in terms of Japanese yen, I think that by the end of this month, we're having the Bank of Japan's meeting again, that we're back in the spotlight. And given that what's the inflation data we have seen for the past months in Japan, they're still taking quite a steady uptrend there, which meaning that Bank of Japan potentially will still have to keep their feet steady on a tightening journey. I think that's potentially why Japanese yen continue to moving up. And I think another thing is about the interest gap. We know that the USD and JPY, the gap in between them will very much likely to narrow down to 4, even less than 4% before the mid of 2025. And that trend is very, very clear that will potentially have more room for the Japanese yen to move up.
Hebe, do you see a trend in the commodity space right now? I mean, given the concerns about China, for example, we continue to see the downside pressure. I wonder how that translates into commodities-related stocks and commodities-heavy markets as well.
Yes, we have seen the commodity sector is taking quite a divided view. On the one hand, we're seeing the gold prices, the safe haven commodities continue to be favored because all this uncertainty we talk about, we know the next 2 months won't be easy, and the geopolitical tensions still underpin the highly demand for the gold prices, the safe haven. But on the other hand, we're seeing that the copper or the manufacturing metals, iron ore, for instance, dropping below the $100 mark. And they are the reason, they are quite the surface commodities been taking quite a lot of heat and pressure from Chinese economy. If by the end of, we're seeing the Chinese economy by the end of the year, that couldn't making the 5% GDP growth mark, I think that there's still more room for all these construction China-related commodities to navigate these prices even downwards. So I think that the quite divided view there. I'm still quite positive on the safe haven, still quite positive on the gold prices. But on the other hand, we probably will see quite some uncertain time for the rest of the commodities.
Hebe Chen, great to have you with us, market analyst at IG, of course, in this very volatile day when it comes to global markets, especially given what's happening with Nvidia. Take a look at that plunge of more than 15% over the past 5 days. We continue to get the downside pressure, with shares plunging just in the overnight Wall Street session more than 9%. That's wiped out about $280 billion. That would be the biggest loss of value ever for a U.S. stock. Of course, we have some disappointing earnings, but of course, very, very high expectations. But at the same time, we're now hearing that the DOJ has sent subpoenas to Nvidia and other companies as it seeks evidence that Nvidia violated antitrust laws. Let's bring in our senior tech editor, Nick Turner. Nick, so what's this about?
Well, so we knew that the Justice Department was probing Nvidia. The Justice Department, of course, is one of the 2 major agencies in the U.S. that investigates antitrust, the FTC being the other one. And they earlier had sent out questionnaires to other companies just in terms of looking into Nvidia's business practices, and now they're at the stage where they're sending out subpoenas, which are legally binding requests. It shows kind of an escalation in the probe.
Nick, how serious could this get for Nvidia? And it's interesting that we've seen this perhaps not as a catalyst when the rally was still continuing to go up, but is this sort of just another reason to add to the existential questions that investors have over AI?
Well, I mean, as you mentioned, the shares, this report came out after the market closed. They did come down a little bit more after that point, but they really took the big hit during the regular market hours, and that was more fueled by some of these concerns people have had about Nvidia not quite growing at quite the rate that some people had been hoping. Obviously, they had their earnings last week, and some people out there have been disappointed in what they reported, and just kind of shaking the confidence in this whole AI boom.
What are the implications for the broader chip maker sector? Because we saw the Philadelphia Semiconductor Index also seeing its worst day since the start of the pandemic.
Yeah, I mean, I think that just purely on the terms of the antitrust probe, I should say, obviously, limited to Nvidia and something that probably will take years to play out. So it's hard to say how much of a factor that is in terms of broader concerns about the chip industry. But so much of what's been driving chips this year, not just Nvidia, has been the AI excitement, and certainly that's shown up in Nvidia's sales, and it's showing up in companies like AMD's sales, but we're still kind of in early days, and I think people are just trying to figure out how early days are we, and how much, what are the legs left on this run up.
Senior tech editor Nick Turner there with the latest on Nvidia. Well, coming up in the Asia trade, the president and CEO of Global Chips Association, SEMI, and UBS's head of Taiwan research will be joining us live from this is SEMICON in Taipei. Plus, we'll be talking market strategy with OCBC Bank, growth concerns weighing across risk assets. This is Bloomberg. Well, Nvidia's $279 billion rout is set to weigh on appetite when it comes to the broader chip sector as we get the start of trading here in Asia about to get underway, and certainly we are setting up for some pretty difficult levels when it comes to risk appetite given just the magnitude of the sell-off. It's really pertinent time to be talking all things chips. Our tech reporter Annabelle Jewellers joins us now live from Taipei at one of Asia's biggest industry events at Semicon Taiwan. Belle, what are we expecting in terms of the market reaction to Nvidia? And, you know, I remember just a couple of weeks ago we were asking to see if the guidance-driven sell-off to pretty robust numbers was merely a blip or something that's a little bit more sort of systemic.
Yeah, that's right. And that's certainly going to be one of the major talking points at the conference today because, yes, you had those numbers for Nvidia just recently and certainly solid numbers, but not enough to impress even the loftiest expectations that we'd seen on Wall Street. And so that certainly is sending a lot of trembles, jitters through the markets for the session today. Thinking about what it means for Asia in particular, because, of course, a lot of the bourses here are heavily correlated to what we see in the tech index in the US. I'm thinking, of course, about Taiwan, Japan, Korea, very heavy presence of major tech companies that are some of Nvidia's biggest customers. What we are expecting today is a significant sell-off. You've got contracts that are already pointing to drops of more than 3%, again, for Taiwan, also over in Tokyo. Japan's contract, again, set for weakness here, a little bit less liquid, perhaps a little bit less reliable, but certainly today not going to be a great day for Asian trading sentiment at all.
So what a great time to be at Semicon Taiwan. That conference, of course, really very center stage when it comes to Taiwan becoming the center of this AI exuberance, not to mention, of course, the chip revolution.
Yeah, that's right. And again, going back to perhaps one of the key talking points here today, especially in the light of Nvidia, is going to be more around how sustainable is the demand for AI and the AI boom, the AI frenzy. Will we see that hype extending? And something that a lot of people that I'm speaking to on the ground are telling me is that we're still in the early innings of this phase. There is a lot of demand. And part of that is that a lot of the applications have not been discovered or put into practice just yet. And one that we're going to actually be speaking with UBS about is this so-called move to the edge. And I'm talking here about this shift to on-device AI. So you're going to have AI processors that run on a device. It means that you don't have the need for a server or a cloud connection. And that is a far greater market, the PC market, the smartphone market, than what we see in the AI cloud market. So there could be a lot of demand to come. But again, a conversation to have with Randy Abrams from UBS just ahead this morning.
Also, we can imagine a conversation on geopolitics as well.
Yeah, that's right. Of course, especially with the location of Taiwan, but certainly never far from the headlines and the thoughts of perhaps of a lot of different company executives here. But you think about just one semiconductor, and from start to finish, it has traveled nearly 40,000 miles. You're talking about 50,000 kilometers. Dozens of countries and companies that it's hitting as well are touching in that process. So the ability and the capacity of supply chains to be disrupted is significant here. And of course, you just continue to monitor these headlines. One of the latest, for instance, we're hearing is that Taiwan is accusing Chinese chip companies of illegally poaching talent and trade secrets. So again, it's that heated global rivalry in this part of the world as well. Something to discuss very closely with Ajit Manocha. He is the semi-president and CEO, joining us in about 15 minutes from now.
Bloomberg tech reporter Annabelle Jewellers there. And we do have an alert on Nippon Steel. Of course, we had that proposed sale of the company U.S. Steel to Nippon Steel. We had heard before from Vice President Kamala Harris that the United States Steel Company should actually remain U.S.-owned. Well, Nippon Steel has now released a statement saying that U.S. Steel will actually remain a U.S. company. They outlined a governance policy for U.S. Steel, that U.S. citizens will make up the majority of the U.S. Steel board, and that they commit to not moving production or jobs out of the United States. Of course, we had really that pressure on U.S. Steel shares, given that perhaps a Democratic nominee for president president would oppose this deal. It was the first time that we heard from Kamala Harris talking about the fact that U.S. Steel should remain a U.S. company, and we're now getting the latest lines from Nippon Steel outlining a governance policy for U.S. Steel, with the gist being that U.S. Steel will remain a U.S. company. Still ahead, Cathay Pacific says all its Airbus A350s should be back in service by the weekend as it finds fuel line faults in more than a dozen planes. An update next. This is Bloomberg. Cathay Pacific has cancelled more flights on Wednesday as it carries out checks of its Airbus A350 fleet focused on fuel lines. The Hong Kong-based airline says it expects all affected planes to be back in service by Saturday. For more, Bloomberg News aviation reporter Danny Lee joins us now. And Danny, of course, a key concern was whether this could end up being a widespread issue. But first of all, what exactly is the problem with this engine component?
Yeah, it's a fuel line that feeds fuel into the engines, and Cathay found some deformation of this particular part. And it was found in 15 aircraft. It was eventually able to check, and so it has to get parts, the same part across these engines replaced across both its A350-1000 aircraft and the Dash 900. 3 of the aircraft have already been fixed, and so whilst they're waiting for parts for the rest of the aircraft, there will be still flight cancellations, and Cathay will give an update later on today on just how many more flights it will have to cancel, focused on cancelling regional flights in the meantime. And so clearly the news it gave a couple of days ago really spooked the wider industry, and the industry, whilst an investigation is still underway, in fact, everyone is watching very closely to see really how much does this matter. And I think the consensus is this is a minor issue overall.
Okay, to be fair, it spooked us as well, right? Especially with potential disruptions for other airlines as well. Are we expecting that?
Yeah, I mean, the divergence of A350 operators has been quite interesting, particularly in Asia, our part of the world. Japan Airlines, which operates 5 A350-1000s, for example, it said it will be checking all of those aircraft. And we also had Singapore Airlines, which doesn't operate the same type. It operates the A350-900, but it's also the largest operator overall. It said it will be checking its aircraft as a precaution. We've had some airlines in Europe also saying they're monitoring things very closely, but we haven't seen too many other airlines comment. They've been trying to wait for advice from their own regulators or also from suppliers such as Airbus or Rolls-Royce. So clearly it's been a bit of a divergent point here between some of the airlines around the world.
Bloomberg News aviation reporter Danny Lee there. Will be watching those stocks, Cathay Pacific, Japan Airlines, in trading in the Asian session. This is Bloomberg.
Take a look at how we're setting up when it comes to the start of trading, and we are bracing for the impact of just the extent of the Nvidia-driven sell-off that we saw overnight to really track through to Asia. This was the first US sell-off since August, and we saw that big crash there, but certainly with the S&P 500 seeing that fall of over 2%, with the biggest drop since that previous meltdown in last month. US manufacturing activity contracting for a 5th straight month. These revived concerns about recession risks really coming out to play at a time when we saw further, of course, pressure when it comes to Nvidia and that massive sell-off there, driving that plunge in tech stocks. And we also saw, of course, that classic risk off trade with the yen jumping, as well as the move in treasuries there as well. Sydney futures looking pretty soft at this point, over 1.1% lower there. We do have the GDP numbers. They are backward looking, but certainly when it comes to some of the strength that we've seen in key indicators, including just the PMI data out this morning suggesting further expansion, it could just give further supportive evidence for the RBA in maintaining its hawkish stance and being sort of behind the curve there as much of the world's central banks get on with easing. Shery.
Yeah, and in China, we'll also be watching Haidi. Alibaba.com. It's now saying that it's upbeat about growth after China's 3-year-long scrutiny of its parent company came to a close. President Kuo Zhang told us he sees bright prospects for the digital business.
We are part of the business of AIDC, which is the global business part of Alibaba Group. And in this quarterly release, the AIDC actually is more than 30% of growth in revenue. And Alibaba.com, the B2B part, we are more than digital, two-digital growth is 12% of growth for the last quarter. And first of all, if you see from the kind of global business, we see the global business is growing, is fast, especially for the digital part. We are using all kind of technology to enable that. And the second, from the kind of customer perspective, so we see there's a lot of kind of customers going global. It's not only from China, but from all over the world as well. So we see many of the kind of areas that is a 30 or 40% of growth from the new customers' perspective.
That was Alibaba.com President Kuo Zhang there. Another story that we're following, and sources say BYD won't announce plans for a plant in Mexico until after the US presidential election. They say the Chinese EV maker has paused scouting at 3 locations as a way to see who wins the White House. We're told the plans may still be revived or could change. Shery.
Yeah, of course. All of these tensions around EVs, not to mention around tech as well, will come to the forefront as we head towards the U.S. election, right? And we're now getting a call from Goldman Sachs on what the U.S. election would really mean for the U.S. economy as well. So right now we're hearing that Goldman Sachs thinks that if Trump wins in a sweep or with divided government, the hit to growth from tariffs and tighter immigration policy would outweigh the positive fiscal impulse from maintaining most tax cuts. Now, if Vice President Kamala Harris wins and Democrats secure control of both chambers of Congress, then you will have new spending, expand the middle-income tax credits, and all of that would offset lower investments due to higher corporate tax rates. So we're really gearing up for the election vote in November.
Yeah, just 9 weeks away, right? And as the talks of tariffs continue to dominate, on the list of various threats, and of course among them are also the fiscal positioning that could impact what implications there are for the broader direction of the economy and the Fed, we're seeing companies still pretty split, Shery, in the US about to, in terms of how they assess these trade tariff risks. The hikes that were imposed on Chinese imports had, of course, in the previous Trump administration, and that were largely continued, had sort of a variety of different effects, and both Republicans and Democrats, we know, have favoured more protectionist measures in that sense. So companies in America are fairly split in terms of whether the tariff barrage that the US unleashed against about $300 billion of Chinese imports is either backfiring at home or is actually having the intended effect, right? And you can take a look at that in terms of, how those goods are being broken down. And of course, the other thing we're also seeing is some of the retaliatory action from Beijing, Shery, to countries like Canada. And I suppose that gives us a little bit of an indication of what retaliation for US tariffs might look like after November or after January next year.
Yeah, that would really be the key theme in the next few years, right? This bifurcation that we're seeing into different camps when it comes to geopolitical dynamics, especially now some of the other stories that we're following include, for example, Russia and Mongolia having agreed to strengthen economic ties. Vladimir Putin wrapping up his visit in defiance of an international criminal court arrest warrant. Now, the two countries signed agreements covering energy, trade, and transport. ICC member Mongolia has faced criticism for failing to enforce the arrest warrant for Putin over alleged war crimes in Ukraine. Also, here in Japan, the field of contenders to become the next prime minister has widened to 4, with Chief Cabinet Secretary Yoshimasa Hayashi joining the race. Hayashi says he'll pursue people-friendly politics if he wins the September 27 party vote. The next LDP leader is all but assured of becoming prime minister due to its dominance in parliament. A former top aide to New York governors Kathy Hochul and Andrew Cuomo has been arrested on federal charges of acting as a foreign agent for China in exchange for millions of dollars. The indictment names Linda's son and her husband, Chris Hu, who's accused of money laundering. The U.S. alleges Sun acted on behalf of China, blocking Taiwanese representatives from state access.
Shery, let's get back to Semicon Taiwan, where global tech leaders are gathering just as the fresh plunge in Nvidia stock is rekindling worries that the AI mania has gone too far. Belle is in Taipei with our next guest. Belle.
Thanks, Heidi. I want to bring in this morning the Semi-President and CEO Ajit Manocha. And Ajit, what a day for the conference. I mean, I do want to reference it is 7:30 a.m. local time here, so we are expecting 85,000 delegates to come through these doors this morning. The biggest conference we've seen actually on record, I believe you were just saying. But I do want to start with Nvidia because, of course, we've just seen a huge sell-off overnight. The members and constituencies, companies, CEOs that you're talking to, does anyone say anything to you that makes you question that demand for AI chips?
No, there's nothing to question about that. That's real. It's happening. And one of the messages that I've given in the past, recent past, that our industry last year ended up around $600 billion revenue. And by 2030, it's going to be close to 1 trillion. Now, 50% of the growth is coming from AI-enabled chips. So the AI is really fueling the industry growth big time. And so whatever you hear from Nvidia, Google, and other companies who are promoting AI chips, it's all real.
But are we seeing enough of that sort of AI demand, the AI application spreading out? Because you think about Nvidia, there is sort of sometimes a concentration risk. It is very reliant on the hyperscalers for revenue as well.
Well, of course, you will start with the hyperscalers because that's where the AI chip going into the data centers with the edge AI and the high performance computing. So AI is really making a big impact there. So it starts with that, but it's going to go across the board because other applications, well, ChatGPT, we all talk about that. But to wait until another few years when it will make a big impact in the medical world. I mean, I think you can see that genome sequencing or genome editing, that's going to make a huge difference in the human life. How you prevent the disease to happen. With AI, you can really figure out all those things instantaneously and avoid those kind of genetics organization structuring in the body to prevent yourself from the major diseases. I think a lot of impact is yet to come. I think what we've seen on AI is just the tip of the iceberg. A lot more to yet to come.
And if there is a lot more to come, do you think that there's a role that other regions can play? Because I think for chips specifically, right now we have a situation where each country or region is quite specialized. You think about the substrates or the wafers, the materials, they're from Japan. You have the fabs in Taiwan and South Korea. You have the assembly that's done in Southeast Asia, the distribution, the testing that's done in the US. Do we need more hubs, but do the hubs also need to play more roles?
Well, both. I think the hubs need to play more roles, and they are playing the bigger roles in everywhere, especially we are in Taiwan. I think Taiwan is playing a very specific and central role on innovation as well as manufacturing, as always. But as I mentioned, the industry is going to double in size to 1 trillion. And what we learned from the pandemic time, the pandemic as well as the climate issues and geopolitical issues all led to a major showstopper in the world. That is called so-called chip shortages, and we can't afford that kind of misery again for the humanity. What we learned during the chip shortages, that we are so dependent on the semiconductors that virtually every industry in the world is depending on semiconductors, and more importantly, semiconductor is foundational to humanity. I mean, we are really. I mean, I can give you the examples that. So from the children of the age of few months onwards, they have multiple devices, and they live on these devices. So the semiconductor demand is growing. So back to your question on hubs. Yes, if you have the same number of hubs and we have the same kind of crisis, and we have a problem with the climate issues, or, for example, the Ukraine-Russia war, it can lead to some other issues. If we have multiple hubs, we create redundancies. That way, if one hub is sick for whatever reasons, you have a backup option. So we need to create more hubs, and the current hubs, the existing hubs, have to do a lot more to to capture the growth of 1 trillion in next 7-8 years.
When it comes to creating hubs, though, I do hear from some companies here that they're a bit reluctant to establish operations abroad because the markets abroad are not big enough yet to really justify that level of investment. Do you hear that concern as well?
Well, yes and no. I think people are evaluating the other hubs. I mean, as we know that when the U.S.-China trade issues started in 2017, a lot of components and the other manufacturing moved to the Southeast Asia, namely Vietnam and Malaysia. And after the pandemic, when people realized that it's not just the components, the entire value chain has become very critical because of the chip shortages and so on. So companies are saying, we can't depend on the existing bases. We have 1 or 2 more bases that will be useful because we can't be dependent on one particular region in the world. So we need more than one region on many cases, if not all the cases.
Something that's coming up in the short, but definitely in the medium term, is the huge amount of energy demand that this is taking, and it's getting to a point where it's overwhelming entire national energy grids. Are you seeing enough being done to cut down or make chips more energy efficient?
I think that's another very important question that you're asking. You are absolutely right that as we go into the AI era, the chips consume a lot of energy. And our industry is very resilient in terms of innovation. I mean, we started this industry in 70s, and we used maybe 5 or 6 elements of a periodic table. And today we use more than 80 elements of periodic table. And why we've gone to so many elements of the periodic table? Because we constantly exploring the new materials which will reduce the energy consumption or heat dissipation. So we are really, our industry has done a superb job, but a lot more has to happen. So it's the AI, and the next era is the quantum computing era that will also create a lot of energy challenge on the devices. So a lot of research has to happen. When you ask the question about the other nations or other countries, yes, the universities across the world, they should really explore other materials which will reduce the cost of the energy consumption or heat dissipation. There's a lot of room to grow. So we still have 20 more elements left to explore, but each element can lead to hundreds of compounds. It's not just one element means one option. So there are many other options to explore.
All right, Ajit, thanks very much for your time this morning. Shery, that was Ajit Manocha there, Semi-President and CEO here for Semicon Taiwan. Of course, we're expecting 85,000 people to come through the doors later this morning.
Thank you for having me.
And Annabelle Jewelers in Taipei will be there with more updates and more conversations throughout the day. We have more ahead on the Asia Trade. This is Bloomberg.
We're watching a couple of events around Asia this week that could steer major climate policy. In Beijing, the U.S. climate envoy John Podesta meets with his Chinese counterpart Liu Zhemin, to try and make progress on cutting global emissions ahead of the COP29 summit, as well as a U.S. presidential election. Over in Indonesia, world leaders are gathering there for the International Sustainability Forum to establish deeper collaboration on decarbonisation. Meanwhile, BloombergNEF's latest power transition trends report shows more than 40% of the world's electricity came from zero-emission sources last year, and 94% of capacity additions were from renewables. BNEF's head of APAC, Ali Izadi, joins us now with more. So those headline numbers seem really encouraging. How do you, I guess, characterise the performance when it comes to APAC on the transition?
Indeed, the numbers are quite impressive. And in the case of APAC, it's sort of a contradictory trends. On the one hand, the APAC market represents the largest renewable market in the world, but that's primarily thanks to China. So if you look at capacity additions for renewables in the region, China by far leads the region. It actually leads globally. When we exclude China, for example, where I'm joining you from today here in Jakarta, in Indonesia, we haven't seen significant growth in renewables yet. The other challenge that the APAC region faces is that it is the largest region for thermal capacity, particularly for coal. A cumulative installed capacity globally for coal, 80% of that here is in the APAC region. As a result of growth in renewables, we have seen emission intensity of power generation in the region improve. But in terms of absolute emission growth from the power sector, we've still seen continued growth in emissions from the region because the region continues to add thermal power capacity.
Ali, we haven't missed the fact that you're in Indonesia. What a beautiful backdrop and the batik as well, I gotta say, first of all. But looking ahead, what's the outlook for this year on power transition?
So a good indicator would be to look at how much investment we have seen flow into renewables in the first half of the year. So we track the investments based on projects financing dates. And the good news is that the first half of this year, while investment relative to the second half of that last year are slightly down, they're still on par with what we saw in the first half of 2023. This is also in consideration of the fact that solar module prices this year have plummeted. What this means is that for this year, we're expecting that the world will likely add somewhere around 600 gigawatt in DC terms of solar capacity. That's remarkable. To put this in context, last year, the world added about 444 gigawatt of solar capacity. On the wind side, the market seems to be finally turning a corner, and we're expecting a modest growth this year. So likely additional capacity this year would be around 124 gigawatt. And then to put all of this together, what does this mean for power sector emission? If hydro output here in Asia holds, then this year might become the first year where we are seeing substantial reduction in emissions from the power sector outside of an economic downturn. So that would be quite a remarkable feat if that happens, but that very much depends on the weather.
What's really required at this point to put power sector transition back on track to try and meet the Paris goals?
So on the renewable side, we need to see installed capacity triple by the end of the decade relative to where we were in 2023. We need a bit of push there, but definitely countries such as China are more than on track. Others, like Indonesia, would have to do a lot more. Then we also need to scale up nuclear power capacity and, more importantly, start investing in CCS for thermal power and reduce unabated thermal power by 60% within this decade. Again, on the renewable side, we're sort of on the right track on sort of reducing unabated thermal power generation and scaling up nuclear and CCS. We're nowhere near on track for what's needed.
BloombergNEF Head of APAC Research, Ali Izadi, joining us from Jakarta. We have more ahead on the Asia trade. This is Bloomberg. Recent rally in the yen is shaking up Japan's retail sector. Domestic-focused players are leveraging the currency's strength to deliver fatter returns to investors. Senior Asia stock reporter Hideyuki Sano joins us now with more. And Hide, I'm assuming these are these companies that sell domestically?
Yes, exactly. I mean, retailers basically have been selling products in Japan, but probably the most interesting part here is that there's a big divergence in terms of what they're doing. And if we look at department store, their shares have fallen somewhere between 20 to 25% since the end of July. And that is because their growth is mainly coming from overseas tourists. Because of the yen's weakness, they have spent a lot of money in department stores in Ginza or other places. So that has been the drivers of their growth, and therefore their shares have tanked. On the other hand, you have sort of another type of retailers that mainly cater to Japanese consumers, and I guess a good example is Nitori, which is selling a lot of
I know Nitori. Furniture. I just
Furniture.
furnished my entire apartment with Nitori furniture. Yes.
Yeah, when you're moving to Japan, I think that's one of the best places to go. Anyway, so the Nitori share has been sluggish for like 3-4 years, but now suddenly Nitori shares have come back to life. And there are some other examples, although mostly they tend to be on the smaller side. I mean, if you look at companies, I mean, fast retailing is the biggest retailers, but they have big presence here, but they're also expanding overseas rapidly. So they are no longer considered as a pure domestic play. So investors are now focusing on those sort of mid-tier retailers that mainly cater to Japanese residents, which include Nitori and some fast food chains and some others.
Our senior Asia stock reporter Hideyuki Sano and Haidi, I gotta say, all of the names that he just mentioned, like fast retail, the Nitori, the brands that I really have survived on for the past few months here.
Yeah, I was just reading about how the Sanrio land, Puro land, has seen the Hello Kitty stock soar 93%, given how hot it has been this summer in Tokyo. Lots of people headed indoors there, so lots of very fun retail angles to that market story. But take a look at perhaps not so much of a fun story is a sell-off that we continue to see across commodities. When it comes to oil at the moment, we are seeing New York crude a little bit softer there by about 0.1%, still mostly holding on to that slide, the prospect of returning Libyan crude supply. At the same time, of course, continued diminishing hopes of a strong recovery out of Chinese demand there as well. We've been watching iron ore and copper pretty closely, and iron ore, of course, had fallen below $100 there, but it's now looking like tepid upside there in Singapore futures trading. Copper, though, Carlisle's Curry seeing near 9,500.
This is the Asia Trade. We're counting down to Asia's major market opens after we saw really U.S. stocks take a dive overnight. Heidi, of course, that wall of worries, whether it's the economy in the U.S. with weaker manufacturing data than expected, not to mention China, not to mention that exuberance of AI really starting to wane.
Yeah, the antitrust woes for Nvidia really kind of seeing this resurgence of that sort of questioning over where we go next for the AI mania that already had started with the disappointment over their numbers, right? But really back in full force. So a lot of questions, particularly as we are still awaiting non-farm payrolls at the end of this week.
Yeah, in the meantime, take a look at how we're setting up for the Japanese Open, because we had seen those sessions of losses in Japan and Korea. We had the Japanese yen surging more than 1% against the U.S. dollar. Of course, we had the U.S. dollar stronger as well, given all of that risk-off sentiment. But at the same time, we had Governor Kazuo Ueda talking about really reiterating the point on tightening for the BOJ. So we had the Japanese yen at that 145 level. You can see a little bit of strength after weakness earlier in the session, but really it's all about what's happening in the U.S. side of things as well, right? Because we got the ISM manufacturing numbers, we got, and that really led to that session high for the Japanese yen against the U.S. dollar. We're looking at JGBs as well, because we had some auctions still below that 1% level, and Japanese stocks really opening to the downside of more than 1.5%. Take a look at how the Kospi is opening as well, because we have been watching those semiconductors very closely. The Nvidia story, the broader Philadelphia Semiconductor Index also seeing its worst day since the start of the pandemic. You can see the Kospi and the tech-heavy Kosdaq also losing more than 3%, and even more weakness on the Korean won there, 1341, Heidi.
Yeah, we can see more weakness when it comes to this session in Sydney as well. Shery, take a look at how we're setting up. It is that staggered start to trading, so we'll take a little bit of time, but already we're seeing a bit of downside there at the first few sort of minutes or so of trading across the ASX 200. We do have GDP numbers on tap today, backward looking as they are actually expected to see some weakness and really, all but sort of shut the door to any hopes that we could see imminent RBA easing to join the sort of global easing cycle, that hawkish bias is likely to be maintained. That's certainly going to be helped along by the fact that we had some pretty positive PMI numbers earlier this morning as well. The Aussie dollar holding pretty strong there at 67.15, watching the Aussie Kiwi trade in particular on that policy divergence. That hawkishness of the RBA could lend itself to some Aussie strength, even as we see the continued weakness out of that China exposure story there as well. Take a look at treasuries. We did see the reaction across the classic haven assets, the lack of US treasuries, the lacks of the yen as well. There is some expectation when it comes to a Fed cut scenario that we can see that 10-year yield dropping below 2%, but certainly at the moment we are seeing not too much of a move there, Shery.
Yeah, Heidi, our next guest sees Friday's U.S. jobs data as the biggest upcoming risk for markets. With us now is Vasu Menon, Managing Director of Investment Strategy at OCBC. Vasu, always great to have you with us. Is this a lose-lose? Because it doesn't matter which way you go. You really beat to the upside, you miss to the downside. You're still going to get that pressure on, or market volatility at least, in among investors.
It seems that way, but I think a lot depends also on the margin by which it either exceeds market expectations or, falls below market expectations. Now, if the margin is very wide on the downside, then recession fears could resurface. We had the ISM manufacturing data come out last night, the 5th month in a row that ISM manufacturing is down. So recession fears are lurking in the background, so it really is a function of the margin. But at the same time, I wouldn't panic because we all know that for what Powell has said so far, the Fed is prepared to cut interest rates aggressively if necessary, and that provides a backstop, to markets. It prevents markets from, I think, falling too much. So there is a plan that the Fed has in terms of what it might do if there are signals of a recession. So clearly it's going to spook the markets. It's going to create volatility, but whether markets are going to fall off the cliff, I'm not sure because of the Fed messaging that they will step in.
Vasu, at least when it comes to falling off the cliff, SK Hynix in the Korean trading session plunging more than 9% at one point. We're right now down about 7%. And really, it's the worst day since the August 5th meltdown. Vasu, is there any hope for these chip makers, given the exuberance that we've had so far and how many people consider this sector very much stretched?
Well, the sector is stretched. I mean, the chip stocks have done extremely well. The bellwether Nvidia has done exceptionally well. I mean, it's been a star performer. And it's pulled back, I believe, something in the order of 17% from the peak in August. So, yes, chip stocks are under a tremendous amount of pressure. But if you think about it, in the long term, AI is a story that's here to stay. It's going to transform our lives just like smartphones and many other things that happened historically, like, the advent of the internet, the PC. So, we are now at the beginning of a 10-year transformation cycle. So there are going to be hits and misses, hiccups and bumps. And, what we're seeing right now is a pullback in the markets because of, the huge rally. Some of the excesses are being taken off the market. But, in the longer term, I think some of these chip stocks could still recover and come back. So short term, yes, they're going to continue facing pressure. But long term, I'm not negative.
How much does that depend on the firming of an economic outlook for the US, right? If we do kind of get into this pretty comfortable easing cycle, there's certainly further runway for tech stocks.
Well, you're right. I mean, the economic cycle in the U.S. has a bearing on the tech sector as well. And, a lot hinges now on how the U.S. economy performs. But I think more than that, more than the economic cycle, I think, what's happening in the tech sector right now as far as the AI trend is concerned, we think it's a mega trend. It's a structural trend. It's not a trend that's going to last for just 1-2 years. It's bringing them out major transformation industries, consumers, households, and irrespective of the economic cycle, this is a trend that's going to play out over the next 10 years. So I think investors will, at some stage, look beyond, economic cycles and look at the longer term. If you cast your mind back during COVID-19, some of the best performing tech stocks in the economic downturn, some of the best performing stocks during the economic downturn were actually the tech stocks because many of us had to go on to Zoom. And so I think in the same vein, I think AI, tech is a structural story that's here to stay.
I wanted to get to the question of the day, but we are, of course, just getting some further developments when it comes to the steep fall in the Nikkei. The Nikkei 225 average now declining 3%, so seeing the steepest part of, I guess, some of the losses that we're seeing, and we're only just about 7 minutes into the start of the session proper. But Vasu, as we watch for sort of how that transfers into the Asian session, I wanted to get your thoughts on our question of the day, which essentially goes to the issue of the fact that we may just see more bouts of volatility, more of that sort of roller coaster effect. Do you expect to see this kind of pattern of the drop that we saw in August, a rebound, and now we're seeing the steep drop again, largely on the same sort of thematics? Will that just kind of keep repeating? We know that September is historically quite challenging for risk assets anyway.
Indeed. I think September is historically been a very volatile month. I think it's going to be no different this time around. We started off with a big pullback in the markets. The Nikkei is down. I'm not surprised because the yen has strengthened. The big question is whether, the unwinding of carry trades will come back into play. Probably not with the same ferocity that we saw in August, when there were lots of, carry trade positions that were outstanding. But a lot of that has been unwound. But some of that has come back on in the last few weeks as the market rebounded, but perhaps not to the extent it did before. So the strengthening of the Japanese yen could also contribute to further weakness in markets, including Asian markets. And I think September is going to be a very volatile month, not just because of historical reasons, but also because we've got the Fed meeting coming up, plus the debate between Kamala Harris and Trump, which will bring U.S. elections back into focus.
Vasu, we haven't talked about China yet, and speaking of wobbles, right? You talked about the AI story being, a decade-long plus sort of cycle that's yet to really fully see the transformative effects. If you take sort of a longer-term view on China, do you see some of the opportunities at the moment, given how cheap valuations are, even though it is a big structural change the economy is going through?
Yes, there are going to be opportunities in China, no doubt. But the Chinese stock market has been very beaten down. The economy is still limping. One is hard-pressed to find a catalyst for the Chinese economy or the stock market. So it will take a very patient, long-term investor to, be investing in China at this juncture. But I think if you've got the staying power, a view of, the next 5 years, 10 years, then you may take the view that perhaps the Chinese government will announce more stimulus, more interest rate cuts, perhaps, both on the fiscal policy and monetary policy, to try and revive the economy. And on that basis, Chinese stocks could offer nice upside potential over the medium term. But in the short term, it's going to continue to limp because the headline news and the news that's coming out of China isn't exactly, the best piece of news for stock market investors. But I agree, if you take a view of, 5 years, 10 years, the Chinese stock market is something that you probably want some exposure to in your portfolio.
PMIs across Asia, though, seem to be showing that businesses are at least performing better than expected. We do have some more numbers coming out later in the hour.
That's right. The PMI numbers in Asia are holding up better than expected. But, I think it is not just about historical numbers. I think what the markets will now be looking out for is forward guidance on where the U.S. economy is headed, because if the U.S. economy continues to weaken significantly, that's not our base case scenario, but if the data plays out that way, or the Chinese economy continues to limp and weaken further, then some of these PMI numbers in Asia could also be impacted down the road, and that could still, keep investors on edge in Asia.
Vasu Menon, Managing Director of Investment Strategy at OCBC Bank. Well, speaking of investors being on edge, we're certainly seeing that sort of session in Asia today. Take a look in particular at some of the moves that we're seeing across Asian chip makers, unsurprisingly, with Nvidia leading those losses with that record $279 billion rout. The sort of wall of worry being a big part about the questions over the sort of broader investment and capital that's gone into the AI rally and when we're going to see those investor returns. Sinking broader stocks, and we're seeing the likes of Samsung, SK Hynix, though, as well as Tokyo Electron, two of the worst performers, nearing losses, I should say, of close to 6% at this point. So pretty bleak start to what is historically a poor month for stocks in the month of September. Perfect timing to get across to our tech reporter, Annabelle Jewellers, who joins us live from Taipei at one of Asia's biggest industry events, Semicon Taiwan. And Belle, to be fair, it never feels like a bad time to be talking about this, but certainly after the market reaction we had.
Yeah, that's right. And it's certainly going to be one of the questions front and centre today. Is that demand and is that hype around AI, has it gone too far? But certainly that was really what led into the selling pressure for Nvidia overnight. That concern, it first, of course, came up in those earnings, good, but not great enough to satisfy every single person on Wall Street. And that concern also compounded overnight because you had weaker Chinese data coming through, weaker US manufacturing figures in as well. And so that concern for the inflation in the market, plus that spending on AI, would it be justified? Adding to that, we also had some reports coming out from BlackRock's Investment Institute. You had JP Morgan Asset Management as well, both cautioning on AI spending, saying that the AI boom and the AI revolution isn't going to be happening in the next few months or quarters. We're talking about years to go from here. Plus, you're not going to see spending on AI justified in the near term unless you start to see it broadening out beyond demand for AI services in the tech space. So these were some of the concerns that came in for Nvidia, and as you said, the biggest sort of value destruction we've seen for any US stock in history.
Not to mention that it just got subpoenaed by the US DOJ and along with other companies. What are the implications of this?
Yeah, this is significant, and we saw that further adding to the selling pressure. We saw a dip in late trading as well. So what has happened is that the US Justice Department has sent subpoenas to Nvidia and other companies. Now, what it's looking for is evidence that these companies violated antitrust laws. So it's really an escalation here of sorts, because in the past, we'd seen the DOJ sending questionnaires. Now these companies are being legally binded or obliged to respond here. So of course, the concern here is that what the DOJ is looking at in particular is whether Nvidia is making it harder for companies or customers to switch to other AI chips, and as well whether they're making it difficult for buyers that don't exclusively use its AI chips. So it's real concerns that are building about Nvidia's possible monopoly over the market. Nvidia, for its part, says that the reason that it's doing so well, the market dominance, just stems from the quality of its products instead. This is the real investigation here at the heart of it. It was a Bloomberg scoop as well, I should note, on this, but certainly Nvidia has been a company that's drawn a lot of regulatory scrutiny, so set to persist.
I'm really topical today, but what else are you focusing on when it comes to Semicon?
That is going to be front and centre, I think. Really, is this demand? Are we going to see this boom intensifying? Are we looking at it petering out? What's the outlook here for AI chips in particular? One of the key talking points. But beyond that as well, there are these things can justify the rally extending here. So UBS, for instance, we're speaking with Randy Abrams later this hour, an analyst there, talking about what he calls moving to the edge. So you're talking about AI that's now migrating to devices. You're moving beyond AI cloud. You're looking at this instead. So the PC, the smartphone market, certainly a lot of volume and a lot more room to grow here with this on-edge or in-device AI. That's one of the talking points. And then, of course, geopolitics, never far from the headlines as well. Are Taiwanese companies really being compelled here now to move beyond the island, to look for other centres or countries to establish operations? And also, what's the success that we're seeing for places like the US and Europe that are putting out subsidies, grants, other sorts of incentives to try and attract businesses to establish there? Are those making inroads? Are those successful so far?
A great deal to talk about at Semicon Taiwan. Our Bloomberg tech reporter Annabelle Jewell is there. We'll be getting back to her throughout the course of the day for those conversations live out of Taipei. But still ahead on the Asia trade, we'll be talking more all things chips with UBS. Global industry leaders gathering there following that record rout in Nvidia shares. But first, we're live to Beijing as President Xi Jinping prepares to welcome African leaders for the biggest diplomatic event he'll host this year. This is Bloomberg.
Take a look at how Asian stocks are trading at the moment. We are seeing a sea of red really being led lower by those tech names, especially semiconductors. Of course, we had the huge plunge in the overnight session across Wall Street, that exuberance over AI waning, not to mention that Nvidia just got subpoenaed by the DOJ. That's really driving the Philadelphia Semiconductor Index lower and lower. And in the overnight session, we saw the worst day since March 2020. And really, it's a wall of worries. It's not just about the AI issue, the tech issue. September is historically a volatile month, but of course we have weak data from the U.S. in the manufacturing sector, not to mention, of course, worries about China. Now, African leaders have gathered in Beijing as the Forum on China-Africa Cooperation begins as well. It's the first such summit since 2018 and the biggest diplomatic event President Xi Jinping is hosting this year. Our chief North Asia correspondent, Stephen Engel, is in Beijing. Steve, so what can we expect here?
Well, you can expect great importance put on this gathering by the Chinese government. The Global Times, the state mouthpiece here, of course, the newspaper, 16 pages yesterday in the newspaper, 8 of them dedicated to FOCAC, which is the Forum on Chinese and African Cooperation. It's been around since about 2000. This is the 9th iteration. You're absolutely right. It wasn't held in 2021. The last one was held in 2018. So it's been 6 years. 2021, obviously in the middle of the pandemic here, and lots has transpired. Look, there's no question that China has been a huge benefactor to African nations, pouring $128 billion US, mostly in state policy bank lending to African nations all across Africa, government-backed loans through the Belt and Road Initiative, basically supporting power plants, roads, railways, and garnering tons of influence. This, of course, has, allowed China to secure access to energy and minerals, and again, found an outlet for a lot of its excess industrial capacity. And that's where we got into trouble, though, because during the pandemic, there were very few returns on investment, compounded, of course, by rising interest rates led by the Fed, a rising dollar. Many African nations started to feel the debt distress. And China also started wondering, wow, has everything been overextended a bit? Have these African nations overextended in their borrowing? Have we not been as diligent in examining the returns on our investment? So the deal size perhaps is going to be smaller going forward. We had a peak in about 2016 where lending to African nations from China came into about 28.8 billion from below 1 billion in 2000. Last year, it rebounded a bit after the pandemic to just $4+ billion, still well off the peaks. So again, what we're likely to see here with the deal flow as this FOCAC, as you want to call it, begins in earnest this evening with a big gala dinner hosted by Xi Jinping, you're likely to see a little bit of a tighter wallet from Beijing and also a little bit more hesitancy from the borrowers. Keep in mind, Zambia defaulted in the last 3 years. We had Ghana default and Ethiopia and more than a dozen dozen other African nations are teetering on debt crises. So again, it's a bit more muted right now. We'll have to see what kind of projects are going to be put to the fore. And China, no doubt, wants to still play a very active role in Africa. But again, the debt issues are at the fore right now.
And it's always quite interesting looking at just the soft power aspect, right? How much of Beijing's, cold, hard cash investment has translated to influence. What do we know, and has that been impacted by the economic woes of China?
It's obviously been impacted as far as the hesitation, perhaps, as far as infrastructure borrowing. But again, the latest survey, and I'm going to quote this, from the Ichikawa Family Foundation, found that China remains at the top of the list of positive influence of outside nations. About 82% of young people across Africa have positive images of China, compared to 79% for the United States and 73% for the European Union. So, there's still positive influence when you are spending money and you're opening up your wallet and lending to African nations to build out the infrastructure. But again, going forward, how much will that last again? So again, the cheaper products coming from China was cited in the survey as one positive aspect. So again, China will continue to have its influence in Africa. And right now, at least in the younger people, aged 16 to 24, they are seeing it positively as well.
Our Chief North Asia correspondent Stephen Angle there in Beijing. Well, ahead on the Asia trade, this is Bloomberg.
Chip stocks taking a beating in the Asian trading session. Of course, we had the sell-off overnight on Wall Street. We're seeing the biggest losses right now for the likes of Renesas, not to mention SK Hynix, which at one point fell more than 9%. More ahead, this is Bloomberg.
Take a look at how we're progressing. We're just half an hour into the start of cash trading across some of the major markets open for trade this midweek session. It is a down day as expected after we saw Nvidia really leading US stocks lower, the worst rout since the August sell-off, that record $279 billion rout in Nvidia's stock. These AI worries, just one in that wall of worry confounding investors, including concerns about the US economic strength picture and going into, of course, uncertainty over non-farm payrolls, which could potentially be the catalyst for further volatility. We're seeing downside of as much as 3.25% when it comes to trading in Japan at the moment. A lot of leadership, if you will, when it comes to losses by those chip stocks, Shery.
And of course, we continue to be watching eco data, especially out of Asia. We're getting the PMI numbers for the Japan final number. The composite and the services is a little bit lower than preliminary, but we're still in expansion territory above 50. When it comes to the Singapore PMI, the global Singapore whole economy PMI is actually at the highest since October 2022. So we're actually seeing a little bit of upside, perhaps a little bit of downside for the Vietnamese one, where we have actually fallen to 52.3. But you can see right there that it's mostly in expansion territory. Let's get back to Semicon Taiwan, where global tech leaders are gathering just as a fresh plunge in Nvidia stock is rekindling worries that AI mania has gone too far. Annabelle Jewelers is still in Taipei with our next guest, Belle.
Thanks, Shery. Yeah, here joined this morning by the UBS head of Taiwan research, Randy Abrams. Randy, thanks so much for joining us this morning, and of course, really great timing for it. Talk to us about the moves that we're seeing in Nvidia, and it's really that question of the hype around AI chips, cloud infrastructure. Is that going to be continuing?
Yeah, it's a good question because we saw the sell down a month ago, and the reality, investors own this space quite a lot because stocks for semis are up about 120% in the past year. and it's been a lot of strength in the market. So now investors are starting to question, okay, if they have this position, are the ROI coming through for AI? We heard that on the Nvidia call quite a bit. They're a bit nervous when they see some of the macro data is not as strong. And so there's a question whether the music keeps playing, whether the cloud investment is still there. That drives some of the skittishness. Anytime there's a soft economic data, or if they see a little bit of margin slip with Nvidia, reality what we see from the supply chain and from the hyperscalers is that they're going to continue to spend, at least for the next few quarters. The arms race continues, and a lot of the cloud companies are being prompted that they need to invest. And that's keeping the spending there. And that's why I think for investors, what we saw a couple weeks ago, they actually stepped in to buy on the pullback. And I think in this type of market, yes, skittishness, but there is prospect where investors will say, okay, if the demand is still there on AI, prospects for investors to come back.
Something that added to the concern overnight was 2 research notes as well. We heard from JP Morgan Asset Management, and we also heard from BlackRock's Investment Institute. But in aggregate, they were talking about the AI revolution. It's going to be coming in a few years. And also, you need to see that spending on AI broadening out beyond tech and spending on tech service or AI services. Do you subscribe to that view?
Yeah, okay, so I take the view, I think AI revolution, we're in the first phase of the AI revolution. In that phase, it's led by cloud hyperscale. And what you see them investing in, one is their business and all the services that each of these companies deliver is AI. And so whether it's Meta doing the video feeds, that's an internal application. But then also where they're trying to attract all of these enterprises with all that data into their cloud, there's a race for who's going to capture that. And they're also in a race, let's set up the best model. Because we go back to search, Google set up the best search engine, and you get a huge incumbent advantage. That happened with ChatGPT. So I think that first phase, we're still in it. And our view next few quarters, that's going to continue. The second phase, which is corporates, we're at the point, I think, moving from the very early innings, one step forward, where they're trying a lot of activities, starting to move into small production.
And what does that next phase look like then? Because you hear at the event, you've been speaking about this shift to the edge. You're talking about on-device AI. What does that mean exactly?
Okay, yeah, so two phases, I'll say. First phase for investors, the cloud AI has to continue the strength. And I think our view is next 3-4 quarters looks like that's going to happen. We'll see if we get a mid-cycle digestion in between phases sometime next year. But back to semi-cycle, when we think about the edge, that'll be different, and that's a combination of some of the Gen AI running right on your smartphone, on your PC, or small IoT devices. They'll still have to leverage the cloud for, you see with Apple, they go to OpenAI for the sophisticated instructions, but a lot of stuff will run right on the phone. The benefit to semis is that there's a lot more chips going into these endpoint devices. It's not just AI supply chain. Now it's all these iPhone chips or chips in the Android smartphone.
And that also makes me think about sort of the different stages of recovery you're seeing in the semiconductor space, because for consumer electronics, autos, it's been weak. And so if you have that shift, does that mean you start to see a pickup in other parts of the semiconductor market?
Yeah, that's what it is. I kind of think of this upturn, it's 2 definite different prongs. Cloud, very strong. And you could say we're mid-cycle, mid-late cycle for stocks. For other parts, auto, industrial, smartphone, PC, we're still trying to claw off this COVID hangover, this long bottom. Our take into next year, it's probably mild. It's not, we're off to the races. I think Apple Intelligence showed enough features that as they roll out, it might not be this launch coming up, but as we go through 2025 with more features, and their installed base can access those features, that you can start to broaden out semis. So for next year, even though there's fear of recession, for a lot of tech, we're still coming out of the COVID hangover with a relatively low base. So from the micro level, I think we still see recovery for next year, broadening from cloud to now a bit more for these on-device applications.
Something else that's a risk to the outlook, of course, is the US election. And different scenarios. How are you looking at a possible second Trump presidency? How are you looking at President Harris?
Yeah, we did publish a report this week on that. I think it's very binary, very close race right now, but could be two very different outcomes. If we look at the policies, at least that Trump has floated during his campaigning, it would be for a lot of tariffs. Now, those type of policies are difficult for APAC tech. Because for Asia tech, they now have to deal with a lot of production in China for smartphone and PC. Those tariffs were taken off in 2018. If those tariffs go on, they now have to deal with that tax. How much goes to the consumer in a higher priced product or get absorbed by the supply chain? And then you have the potential demand risk with tariffs getting put on those products, where it could be a GDP impact, both US and China. So that would be one side. The Harris policy so far looks to be more an extension of Biden, which to that extent it's more status quo. And I think if we're in the status quo, then it's going to be just about, okay, what's happening in cloud, what's happening on these on-device AI, but it won't be trade and tariffs dominating the discussion like it did back in 2018.
It does seem, though, status quo is still about trying to encourage more companies to establish operations and to reshore, to create domestic supply chains in the US. What do you see here for Taiwan? Do you think that we're going to see an acceleration of Taiwanese companies looking to establish presences abroad, or do they reinvest in this space given they've got a lot of their most advanced chip manufacturing here?
Yeah, I think Taiwan is, they're trying to play a balance. Now, a good thing is there's huge core technology here. Advanced semiconductor manufacturing, high piece of that. Why Computex in May was quite crowded. A lot of the AI servers are made here. But from a diversification, now I think it's still going to be controlled diversification. And to that, we've seen it with Arizona, where a % of capacity will move to Arizona. Fabs in Europe, in Japan, where they're going to put a piece. And that's where the most sensitive products or long lifetime, auto chips where you have to guarantee 10 years, shift that production for AI to give a second source and have some of that production U.S. But the core and the benefit of this ecosystem, R&D, technology development cost is quite competitive here. So I think for Taiwan, they're going to try to keep it controlled, keep a core base here, and diversify what they need to satisfy those diversification issues.
All right, Randy, okay. Thanks very much for your time this morning. That was Randy Abrams, their head of Taiwan research at UBS. Back to you, Heidi. Of course, Semicon Taiwan up for another day. 85,000 people going to be coming through these doors behind me later today.
Okay, thank you.
Annabelle Jewellers there in Taipei. Perhaps not the most uplifting day markets-wise to talk about all things chips, but certainly very, very pertinent. But let's get some more when it comes to this tech-driven sell-off. Of course, the downside that we see across Asian chip names, and also just the broader market woes here in Asia. Let's bring in Bloomberg's Garfield Reynolds, who leads our Markets Live Asia coverage. And Garf, we're seeing, the topics in particular. This is the worst sell-off since August 5th, which of course was historic. We know that Japanese markets are very liquid, so they're kind of being especially punished. But is this just kind of where we're at the moment, the sort of pattern of, a rebound and then a sell-off? Is it sort of a conviction issue at this time of year, or?
I think it's partly a conviction issue. It is also a situation where, September is traditionally a bad month. Part of what feeds into that is precisely that you have that northern summer break, a little bit of a sort of a phony war going on, and then people get back, they're trying to work out how they're going to play things going into the end of the year. There's a tendency to book profits if that's what you've got sitting on the table, or to reassess, try and reduce the risks in your portfolio as you head into the end of the year, especially in an election year. This year, there's also the concern that valuations, as we've been going up, people have sort of, they were kind of used to the idea that valuations were higher than they were at any time outside of during the pandemic when there was massive easing and, back in the dot-com bubble. So you go away and you come back and you look at those and you go, hang on, things are awfully pricey. That means earnings have got to be doing really, really well going forward. And well, earnings, there's a very mixed picture, especially for, I think there's been a lot of focus on the tech sector, on the AI boom. Nvidia's equity chart looks distressed. The actual company itself is doing just fine, but it's had such an extraordinary run up. Those doubts have built and built and built that this can be sustainable. So in the short term, at the very least, there's lots of reasons to take money off the table, and you've got the jobs numbers coming, and you've got the Fed.
Yeah, so the non-farms take on an even, bigger kind of element of risk, right? Is there an idea that, I guess, we're wondering if we've called the peak for Nvidia, if the last sell-off was a blip, this looks like a bit of a repeat. Does a favourable Fed kind of path forward give tech a little bit more runway?
Well, perhaps, but the Fed's path forward is it's a tough one, especially for techs, which people are starting to remember that techs actually should be like a long duration play, and so interest rates do matter a lot for them. And the market has flirted with the idea that the Fed should cut rapidly, or more than flirted with it when it comes to like the longer term. But in the short term, it's pretty clear the Fed is going to take what the market is saying is a big risk by cutting gradually, cautiously. And if you look, we still have about 27 to 30 basis points priced in for the September meeting. Usual practice would dictate that by the time we actually get to the meeting, we should have either about 25 or about 50, if that's what's going to come. It looks very hard to price 50, so 25 is likely to be priced. We're likely to get 25. That puts equities and bonds in a difficult space.
Not to mention oil prices. I mean, the extreme action that we saw overnight on Wall Street with WTI and Brent really even worse than what we saw in equity markets, right? Right now, WTI oil futures extending losses to around that $70 a barrel. And remember, that was sort of the level that we were at the start of the year when the markets were pricing in, about 6 Fed rate cuts. You've been looking at this, of course. Tell us a little bit about what this means in terms of risk-off sentiment and risk assets now reacting to the global economic picture.
Yeah, well, I mean, part of what went on with oil is it's been held up by some geopolitical concerns, and then more recently by Libya's problems. Libya's problems are going away. That's about 1% of global oil supply coming back on. Once you get the supply concerns sort of off the table, the Red Sea has not gotten any worse the last little while, and you're looking forward to OPEC potentially adding barrels next month. So you can look at the demand side. The demand side has long looked bad. It now looks worse. A lot of that is China, but there's also concerns about the US economy slowing down, about other economies slowing down. So oil's drop overnight sharpened everybody's attention on the potential for a global economic hard landing rather than a soft landing. We all know we're heading for some sort of landing by now. The no landing scenario has sort of gone off the table. So we're going to have a landing. The question is, do central banks, including the Fed, manage to stick a soft landing, which means economies slow down but don't really suffer severe consequences? That's the Goldilocks scenario where bonds and stocks can do okay. Oil is ringing a few alarm bells telling you, well, maybe not. And as I noted, if you look 8 meetings ahead, which is the equivalent, there's 8 Fed meetings in a year. In January, we were looking at 6, maybe even 7 rate cuts within the year. By now, we're looking at 8 rate cuts within a year from the Fed. At least 1 per meeting, with there's a lot of pricing for one cut to be 50 basis points at some stage. So bond markets are actually more concerned about the economy now than they were at the beginning of the year, and oil back then was at about $70 for WTI. So if there's further declines in crude, that's going to emphasize the hard economic landing potential.
Super quickly, Garth, you have BOJ Governor Ueda talking about more tightening. What's going to happen to the yen, I guess?
Well, the yen looks likely to gain this week. The only question is how much, and whether we end up with a fresh burst of yen strength that would add to that would further hurt risk sentiment. The BOJ, the economic scenarios are telling it needs to hike rates at some stage, and yet markets there are not really pricing anything in until March next year at the earliest. So that sets the yen up for gains, and that would be one of the risks if we get a downside surprise on US non-farm payrolls. You could see the yen heading back down towards 142 or so. That would set off a lot of pain trades across markets. We could also, by the way, get a little bit of excitement today if the Mexican peso takes off to the downside. We've had a lot of Mexican peso yen action that's been at the center of some of the market meltdowns at times. So keep an eye on that one for this morning.
Catherine Reynolds, who leads our Markets Live Asia coverage. Very, very busy day for the markets. More ahead on the Asia trade. This is Bloomberg.
There's a orderly unwind and a disorderly unwind. The Fed cut is expected. If they were to be much greater or something like it, it's probably going to be a very orderly process as we move back to lower risk-free rates of return, or think about the cost of capital holding oil in the financial as well as the physical, where that's going to begin to unwind.
Carlyle Group Chief Strategy Officer Jeffrey Curry there, and down we go when it comes to oil. We have erased now all of the gains for 2024. WTI futures now extending losses to around that $70 a barrel level. That's sort of where we started in 2024. And remember, that's when we were pricing in about, 6 rate cuts or so from the Federal Reserve. So now we're seeing this really ongoing pessimism about global growth really pressuring the oil space even more. Let's bring in senior energy reporter Steven Sapchinsky. Steven, is there no winning for oil bulls at this point, whether it's demand concerns or even supply concerns?
Yeah, I think when you look at the trend, there have been some things in the market over the last few days that have been kind of swinging oil prices. But when you look at the trend, what's been driving the market over the last few months has been two things. Weaker than expected demand out of China and the United States as the economic profile begins to diminish. And at the same time, you also have OPEC Plus pushing forward with plans to likely add more barrels to the market from October, unwinding their production cuts. Now, both of those are important. I'm going to focus on OPEC Plus for a minute. There was an expectation with oil prices falling, with this oil supply overhang kind of in the market, with everything looking frothy, that analysts were saying OPEC Plus will likely push back their cuts. So there was an expectation in the market that they wouldn't follow through with it. There's also this view widely that Saudi Arabia needs Brent oil above $80 to balance their budget. We're not at that level at the moment. We're well in the low 70s level. So there was an expectation that Saudi Arabia and others would just extend these cuts. But according to Bloomberg reports and according to my colleagues across Europe and the Middle East, their sources are saying that is not the case, and they haven't had discussions yet about delaying these cuts. They're likely going to push forward with adding about 180,000 barrels a day to the market from October, and a gradual increase over a number of months and quarters. So that does actually, according to analysts, even though they're following through with this plan, that's a bearish surprise, and that's pushed things lower. Meanwhile, at the beginning of the year, I think there was a lot of expectation that China would really come out. You could see maybe the government pushing for stimulus, pushing for more spending, but that also hasn't really materialized, and nor have we seen a really big rebound in the Chinese demand that could potentially kind of erase some of that froth, some of that overhang from the market.
Is there now some optimism when it comes to the resumption of output from Libya, and could that potentially, impact prices again?
Yeah, absolutely. So there is an expectation. Libya last month surprised the market when part of the country, due to a internal government conflict, they reduced output by about 500,000 barrels a day. That's half their output, and it's also about, and Libya makes about 1% of global oil supply. So that did push prices up temporarily. Yesterday, there's an expectation that a deal can be made and that they are getting close to that, which means that oil can then resume. That's why you saw such a sharp sell-off. But Libya, in a lot of ways, is a bit of a sideshow in terms of the fundamentals. You're going to see these different sort of things that come into the market, surprises, whether it's a Libya production cut, whether it's conflict between Israel, Hamas, conflict in the Red Sea. Those sorts of situations add a risk premium, and you could see a temporary spike. But overall, the fundamentals, again, look back to what's happening in China and what's OPEC Plus going to do.
Our senior energy reporter, Stephen Stepchinsky, there. More ahead on the Asia trade. This is Bloomberg. Take a look at how futures, both here in Asia and how US futures are trading at the moment. And we're just contending with a multitude of worries, right? Be it Nvidia's DOJ subpoena and this escalating antitrust situation, or these concerns over Chinese economic growth, US economic resilience, the risk heading into non-farm payrolls. We're seeing downside when it comes to Greater China futures. Taiwan futures likely to see a dip given the special weakness that we see in chip stocks. This is Bloomberg.